Ladies and gentlemen, good day and welcome to the investor call of Cosmo First Limited to discuss the Q4 FY23 results. Today we have with us from the management, Group CEO Mr. Pankaj Poddar and Group CFO Mr. Neeraj Jain. Starting off with the statutory declaration, certain statements in the conference call may be forward-looking. These statements are based on management's current expectation and are subject to uncertainties and changes in circumstances. These statements are not guarantees of future results. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. Now may I request Mr. Neeraj Jain to take us through his opening remarks, subsequent to which we can open the floor to the Q&A. Thank you, and over to you, Mr. Jain.
Thank you very much. Very good afternoon, ladies and gentlemen. I am Neeraj Jain, Group CFO at Cosmo First, along with my colleague Mr. Pankaj Poddar, Group CEO at Cosmo First. Both our financial results as well as the investors' presentation are available on company's website. We hope you go through the same. We will start the call with a brief on the performance of the company for the quarter 4, which may be followed by the questions. So first talking about the flexible packaging business. Although quarter 4 was a fairly challenging quarter primarily for the commodity part of the business, however, company could still post 10% EBITDA on the back of the specialty film portfolio. The results are clearly outperformance compared to the industry. During the quarter, commodity film margin both on the BOPP and BOPET witnessed a further decline compared to the previous quarter, impairing the profitability of the entire industry. You notice that from last couple of quarters, BOPP and BOPET industry faces supply scenario caused due to bunching of several new production lines together. Although demand side continues to grow, the bunching of supply caused margin drop and impacted everyone in the industry. Cosmo, with over 2/3 of its revenue coming from the specialty film, could withstand the margin pressure and clearly outperform the industry once again in the quarter 4. BOPP film margin has been running close to 10 rupee per kg in March 2023 quarter compared to 17 rupee per kg in December 22 quarter and 50 rupee per kg in March 22 quarter. So very significant gap in the commodity part of the business. You would also notice that this margin of 10 rupee per kg is quite low compared to average historical margin this industry has been earning, which has been close to 25 rupee per kg. It may also be noted that even in such a challenging market, the company's specialty margin remained broadly intact in line with the last year. While the commodity margin has gone down to 1/5 of the last year margin, but specialty margins remain fairly firm. Semi-specialty product category margins are also down by almost 40% compared to last year. All of these details are available in our investors' presentation. Coming to BOPET line, which was commissioned in FY23, which continued to focus on the perfecting recipes, processes, and quality parameters on various specialty and value-add films. This is in line with the company's larger strategy to enter into the polyester film. There was about 5 crore rupee of the EBITDA loss in BOPET during the quarter. The company is working on the key specialty product on the BOPET line, which are expected to deliver results within FY24. With objective to promote sustainability and rationalize costs, the company has entered into renewable power agreement to source 40% of its power requirement for its largest plant through renewable sources. The power has already started from May 2023 and, of course, besides promoting sustainability, this will also rationalize cost in a material way. In medium term, the company is looking to source almost 50% of its power requirement through renewable sources, which will serve twin purpose of sustainability as well as the cost rationalization. Moving to flexible packaging outlook for the coming months and the quarter. So the company expects the position to improve in the coming months, bringing an end to the quarter-to-quarter decline which has been happening from last 3 quarters continuously in a row. So there is already a marginal uptick we have seen in May 2023 month actually, margin. So besides specialty sales, the company shall clearly focus on cost rationalization measures in FY24. The company has launched several new specialty firms, including shrimp for packaging and non-packaging applications. Several other specialty firms for non-packaging applications are also in pipeline, which should hit the market in the coming quarters. All these would, of course, strengthen the company's position in a specialty firm business. We'll continue to build on a specialty product portfolio to maintain the lead over the industry in the coming quarters as well. Now I'm going to move to March 2023 quarter financial results. So the consolidated sales for the March 23 quarter is 715 crore rupees, which is lower by about 2% compared to December 22 quarter, although volume is higher by about 4%. This drop is mainly due to lower commodity margins and mix change. EBITDA for the March 2023 quarter is 74 crore rupees compared to 86 crore rupees in December 22 quarter and 165 crore rupees in March 22 quarter. The EBITDA is largely lower because of the margin which we already discussed. The results also include operating losses of its pet care division. Despite drop in the quarter earnings, our financial remains fairly strong with annualized ROCE of 16% and return on equity of 20%, which is of course on the leading side in the entire industry. Now we are going to move to specialty film update. Well, if you notice, specialty film sale has been growing for us from last 4 years, almost with 13% CAGR growth rate. Specialty growth remained broadly flat in FY23 and that too got slightly impacted in second half of FY23, mainly due to inventory correction in some export markets, primarily being the Europe and the US. The company expects specialty to improve and recover in FY24. And of course, we are targeting double-digit specialty film sales growth in FY24. On BOPEX side also, the company is in process of launching several new specialty products, including heat control film, security film, and PETG film. Heat control film is scheduled to be in market in second half of current financial year. The film will go through the various certification processes and parallelly company shall create a distribution network of dealers. And in the phase 1, we will focus primarily on the Tier 1 cities. Now we are moving to flexible packaging growth projects where the company is working. So as we discussed in the past, work on BOPP and CPP line is progressing in line with the plan. Both the lines are world's largest production capacity lines and will increase company's existing capacity by almost 45% in a phased manner by March 2025. With high-speed large width line, it will rationalize cost of production between 3 to 5% compared to current cost of production, depending on the product. So CPP line and BOPP line, of course, besides adding the capacity significantly, it will also promote sustainability because both the lines will offer mono-layered structure. Moving to subsidiary on the specialty chemical side, the company's subsidiary into specialty chemical posted 35 crore rupee of sales during March 23 quarter, which is 17% higher compared to similar quarter last year. During FY23, specialty chemical subsidiary has done overall 159 crore rupee of sales, which is 75% higher compared to last year. The company could reach almost 75% capacity utilization on its master batch line. And of course, besides this, complementary adhesive business for packaging segment is all set to grow in current financial year. Moving to pet care division, the company's direct-to-consumer vertical, which was launched under brand Ziggly in September 2021, is progressing in line with the plan. The company has already started 15 experience centers at March 23 end, and this is of course beside the sales through online portal and online app. The current monthly GMV for the Ziggly is close to 2 crore rupees, which we are targeting to be 10 times growth in next couple of years. FY23 GMV for Ziggly division is 13 crore rupees, which is of course 9 times compared to last year sales. Ziggly so far has served more than 23,000 customers already, and of course we have 1/3 of the repeat customers. The company's focus for Ziggly shall continue to be to grow it multiple times in next couple of years. Besides organic growth, the company is also looking for inorganic growth for Ziggly. So an acquisition opportunity in online pet care space is almost at the final stage, and we expect it to close soon. This would further accelerate the company's growth in the pet care vertical. We will be able to share more detail about it once we freeze on the agreement in due course. So overall, for Ziggly, it's all set to make a substantial impact in India's pet care industry. Now we'll move to growth and debt level in the company. Company is looking to almost 500 to 550 crore rupee of capex in a phased manner by March 2025, which would be largely on the value-add capex on the BOPET line, CPP line and BOPP line. The current net debt of the company is 433 crore rupee at March 23 end, which is 0.3 times of net debt to equity and 1 time of net debt to EBITDA. So fairly healthy financial. Now, of course, in the last but not the least, moving to corporate announcements, the Board of Directors has recommended 5 rupee per equity share dividend for financial year 23. This, of course, is subject to approval of shareholders in upcoming annual general meeting. This dividend, coupled with 1:2 bonus given in June 2022, along with the buyback of shares done in February 2023, reaffirms company's commitment to provide a regular return and share prosperity with the stakeholders. So I think those were the updates for the quarter. Now we would like to open the call for questions, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Shubham Agarwal from Aequitas Investment Consultancy. Please go ahead.
Yeah, thank you. Thank you for the opportunity. Sir, my first question is related to the spread. You mentioned that last quarter it was 10 rupees. So I just wanted to understand what is the current trend, given that you mentioned that there is some recovery. So what is the current spread trending, and how do we look at the spread for rest of the year?
Well, actually, Shubham, we are not very sure, since it's a forward-looking statement, whether we should be able to share the current margin trend. All we can also add here is there is a marginal uptick we have seen in the May 2023 performance from the last quarter.
Okay, but any directionally, how do you see it, given that this year there are 2 new lines and next year there are 5 more lines expected to come up? Given the current demand scenario, if you can just help us understand how do we look at this industry?
I mean, there's already an industry base which has been growing close to 10% year on year. So in any case, industry needs 2 production lines minimum each year just to sustain the new growth. So from that perspective, FY24 new 2 lines should not impact much. But of course, if bunching of line happens in FY25, this may create some pressure temporary for a couple of quarters. But other than this, we see over a period of time a balanced demand-supply scenario to come back.
So, given that the margins have remained so low, have you seen any closure of inefficient plant in India?
Well, Cosmo's all lines are running full, so we are, except the maintenance shutdown, we have been able to run all the lines fully during the day.
I'm talking about industry level, if you have any idea.
Well, there will be some closure at the end of the industry, but so far Cosmo has been able to run our lines fully.
Got it. And secondly, on the specialty sales, that so for FY23 we did some 62% in terms of specialty. Now this also includes semi-specialty, right? So what is the percentage of actual specialty in this 62%?
So very broadly, it's 1/3, 1/3, 1/3. 1/3 is specialty, 1/3 semi-specialty, and 1/3 commodity part of it.
Okay. And would it be possible for you to share the semi-specialty spread for the current quarter compared to last quarter?
Yeah, that should be available in our investor presentation.
Okay. No, so in the investor presentation, it is given year-wise, so it is close to 40 compared to last 50. I wanted to understand Q on Q.
We can share separately, but it will be a little difficult to reconcile on the Concall.
No problem. And lastly, on the demand side on specialty, how do you expect it to grow for the current year, given that last year we were flattish?
Well, there are very excited products in pipeline on the specialty side. So company is quite optimistic about the specialty growth in current financial year.
Okay. So double digit is something you are mentioning.
Say again, please.
No, it's okay. And lastly, on the pet care business, on the acquisition side, you said that something is on the pipeline. So what is the total amount earmarked for acquisition in the current year?
So it will not be very substantial amount from the payout perspective, but what we are looking for more strategic fitment, and that adds value. So our acquisition strategy for this weekly, you will notice in alignment to these key parameters. But from the payout perspective, it will not be a very significant amount. So we'll of course share the much more detail once we sign the final agreement.
Got it. But what is the specific capability that we are trying to address with this acquisition?
If you notice, the channel which we are trying to create in the Zigbee is through the retail distribution as well as the online sales. So in either of these two, a good fitment which accelerate the overall growth with a higher kind of the volume. So that's the primary strategy we are looking for with this growth.
Okay, fair enough, sir. Thank you. I'll come back in the queue.
Thank you. The next question is from the line of Sagar Shah from Phillip Capital, PCG. Please go ahead.
Hello, sir. Good afternoon. I had just a couple of questions. My first question is, can you give the volume numbers for this quarter?
There's a little disturbance that is coming from your lines from the background.
Yeah, sure. Better? Yeah. So basically, can you give us the volume numbers for this quarter for specialty films and for the commodity films?
That in percentage terms, so that is also available in our investors presentation. As I said, it's broadly one-third kind of the portfolio. There may be some up or down in a specific quarter, but very broadly that's the one.
Okay, sir. Okay. And just secondly, I wanted to understand on the demand front. Is the demand right now improving, especially from the FMCG sector?
Since a large part of our sales goes to consumption-driven kind of industries, including FMCG, tape sector, textile sector, etc. So demand side, we do not see any kind of the issues. The whole of the commodity part of the business got impacted largely because of the supply side came with a short time distance. So bunching happened over there, which we see since the demand side has been growing close to 10% year on year. So we see that temporary gap should get mitigated over the coming quarters of the year.
Okay, sir. Okay. I got my point. Thank you so much.
Thank you. The next question is from the line of Amit Agarwal from Leeway Investments. Please go ahead.
Good afternoon. Sir, my first question is regarding, specialty products. Since 60% of our products are specialty products and they are priced at cost of raw material plus fixed margin, is it fair to assume that higher margins are only possible when oil prices rise from current levels?
Sorry, you need to repeat your last part of your question.
Is it fair to assume that higher margins are only possible when oil prices rise from current levels?
No, actually, because as you know, even for the commodity part of business also, there is a price reset mechanism available in the whole of the industry. Each 15 days basis, the raw material price get reset, and on the same day we also revise our selling price to the customers. So in a normal balanced market, there is already identified price, raw material price passing mechanism available. The issue these days is more because of the excess supply, but industry from the raw material commodity perspective, it runs fairly in a mitigated way.
So now, if the oil prices are above $100, so that will pass on to our raw material cost, and that will pass on. Then we have to pass on to our final product also, and that gives a higher turnover as well as higher margins.
That's true for a balanced supply scenario. The passage of the raw material cost is possible, and that has been happening.
Okay, and my second question is, sir, for last 2 months we haven't opened a new Zigbee store. So are we able to meet? Are we still planning to meet our target of 30 to 40 stores by the end of this year?
So we announced for FY23 and we should be having close to 15 stores. which is the number we targeted and we achieved also. So the current financial year, of course, we are looking for assertive growth again in terms of both the retail presence as well as the online sales. So we should be able to almost double the number of stores in current financial year.
I think earlier we were targeting around 40 stores, if I'm not wrong.
That will happen over a period of time, not for the current financial year.
Okay. And my last question is, how much has been the loss of in this quarter related to pet care business in this last quarter?
Sorry, again you need to repeat your question.
So how much has been the loss of pet care business in this last quarter?
So you will refer, our segmental reporting. All of it has, quarter-wise and year-wise numbers. So primarily the segment of others indicate the, in terms of the profitability, the pet care division.
So one would like to give the, last time you gave that, this much loss, last time you were able to give us the amount.
No, sorry, not able to understand your question.
Last quarter, you were able to give us the exact amount how much we lost in the third quarter in pet care business. So, is it possible to give it right now also?
Number is available in the segmental reporting. It should have been closer to 7 crore rupees.
Okay, thank you. That's it. Thank you.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1. The next question is from the line of Harsh Mulchandani from Chris Portfolio. Please go ahead.
Thank you for the opportunity. I wanted to understand how do we plan to utilize the upcoming capex, like for example, heat control films or for shrink pets. I think there are already competitors who are into this stream already. So how do we plan to take market share from them, and do we have any contracts in place, or what strategy you will be going forward to make sure that your lines are able to run at optimum utilization? That's my first question, and then I'll come to the second one.
Yeah, window films is a consumer product and it does take time to scale it up. We have spent good 3 years to do a lot of research and make some very innovative films when it comes to window films. There are already 6-7 different categories of products. We are expected to launch this in Q2. And as I said, consumer products do take time. It's not about capacity utilization, it's more about building sales. As we have said earlier, this is a high margin product category, but building sales is the main, I would say, challenge along with building the right product. So we have already surpassed the right product. Important is to build up sales and educate consumers in terms of the benefit of window films.
Got it. So you are trying, so in a nutshell, that your product is at par or better than the competitors, and then it will take, is it fair to assume couple of years to scale up the sales because it will be more on the retail side?
Yeah, we do feel that every year there should be ramp up in sales. See, right now, important thing is in a country like India, very few customers take the advantage of window film, and it can reduce the room temperature anywhere between 4 degrees Celsius to 18 degrees Celsius, depending on the film that is being used. So first important task is to educate the customer so that they get aware and they get interested in buying this kind of a product. Today, most homes in India do not use homes or offices or factories do not use window films, and the penetration is far lesser versus America. I mean, America today we know is a much colder country than India, and the way the Indian temperatures are there, I feel every home, every office, every factory should have a window film, which unfortunately is not the case. So with proper education, we feel that the market can expand many fold.
Fair. And similarly, like the other specialty products also which are building, what I heard from the initial opening remarks was I think into shrink pet products and shrink films, and I think one more product you mentioned. So again, similar strategies that even those will take some time to ramp, breakthrough, and as of today, there is no breakthrough as such in terms of getting sales. Is that understanding correct?
Shrink already sales have started coming, and a lot of products which we were already having expertise in BOPP, we are able to have sales for them in BOPET. We've also developed a very innovative product for microwave oven. That product also we have recently launched, and as per our internal study, it has come out very well. So we continue to build new products to the market and build a specialty portfolio.
Got it. Just last one question. Where do we see ourselves 5 years down the line with respect to specialty percentage of sales? Like right now it's around 1/3. So do we expect it to be more than half of our sales, say 5 years down, or that is challenging to achieve?
If we always combine specialty and semi-specialty, because even in semi-specialty we earn more margins. As we had earlier said that we intend to take this number to 80% on a run rate and 75% for the full year basis. What will really happen is in another 2 years' time, we're adding a lot of capacity in terms of UVP, CPP. And again, we'll have to start building sales for that. So it's an ongoing task. We intend to bring every new line once the existing capacity is largely moved to specialty products. So 5 years from now, it will be fair to say that we'll be sitting somewhere close to 60-70% of overall specialty plus semi-specialty sales.
Got it. So mix would be more or less similar even from your going forward because you'll add capacities across the spectrum.
Yeah.
Got it. Fair. Thank you so much. Thank you.
Thank you. We have the next question from the line of Nirav Savai from Abacus Asset Management. Please go ahead.
Hi, sir. Actually, just missed your initial remarks on the spread. You said that it's about 10 rupees for the quarter. And what was it in the previous quarter and last year, Q4?
For the previous quarter, it was 17 rupee per kg. And last year, similar quarter, it was 50 rupee per kg.
Right. So with the kind of new capacities coming in, you said there are 2 new lines which are going to come in FY24. So what is the base case which you all are assuming internally? What can be the possible margins? Any guidance if you can provide?
So again, first of all, we do not provide any future guidance. All I can share here is March 23 quarter looks a bottomed out because margins have been running closer to the EBITDA break even for the BOPP part of the business. For the BOPET part of the business, it was negative EBITDA. You might have noticed, in some of the peer group results, there's a very clear evidence to what we are saying. So to sum up, we do see already it has bottomed out. There should be uptick in the margins, which we witnessed very recently, marginal uptick in the May 2023 results.
Right. And the second thing was you said commodity margins were 1/5 of specialty margin this quarter. Is that right? Or average margins?
So compared to last year's similar quarter, commodity margins were running 1/5 of the margin.
Right. And so shrink film, any number if we can provide, what is the size of the opportunity in India and what can be the potential revenue which we can get in that business in the next 2-3 years? Or maybe just the overall size of industry in India for shrink films?
It can become a very large market. You see, there's a market of 30,000 metric ton of PVC film, which we feel shrink film over a period of time should largely replace because there are recyclability related issues in the PVC film, which with high shrink patchy film should be able to address much more.
Okay, but any number if you can provide, what would be the current size right now, which is addressable market?
150,000 tons for patchy shrink films.
It's about 150,000 tons. And in terms of value, if you can provide any data?
Yeah, if you largely multiply it by 300 rupees, 350 rupees, you will get the market.
Right. Got it. Perfect. That's it from myself. Thank you very much.
Thank you. Participants who wish to ask questions may please press star and 1. The next question is from the line of Harsh Seth from HDFC Securities. Please go ahead.
Yeah, thanks for the opportunity. Just one question.
Sir, sorry to interrupt, but the volume for you is very low. We request you to please speak closer to the mic.
Yeah, hi. So I just wanted to understand, what is the current breakup of exports and domestic sales, and which are the geographies we are planning to expand in the next year? That's my first question.
Yeah, exports and domestic is close to 50-50. Our biggest target market is Americas.
Right. And so you did mention about working with certain FMCG companies on, on introducing or, working on introducing certain kind of products. You have been, your R&D team has been working closely with large FMCG players. So just wanted to know, where do we stand in product approval stage? What kind of products are we planning to come out with? And when can we expect that to roll out? If you could throw some light on that. And the opportunities.
We have working with the largest FMCG player in the country. We have been very successful and signed a contract for the next year. We have already developed 8 to 9 products for them and continue to develop more products. Many of them are really very, very innovative, done for the first time in the world. Similarly, for another very large FMCG player, we have again done a development, and they are now expecting a next level of development, which is also in the pipeline. Barring this, again, for some of the very large brands, 5 or 6 other brands, there is a lot of work which has happened in the past, and more work is still in the pipeline.
All right. That's on my side.
Thank you. To ask a question, ladies and gentlemen, you may please press star and 1. The next question is from the line of Vipul Shah from Sumangal Investment. Please go ahead.
Hi, sir. So, this BOPP line and CPP line, which we are planning to complete in 2025. So what type of capacity addition we will see from those lines?
Yeah, both put together should be close to 80,000 tons.
Both put together 80,000 tons. Okay. And what type of ROE and ROC we can expect from that line, sir?
In a normal market, the payback period should be close to 4 years.
In a normal market, okay. And sir, what will be the capex for chemical business and this pet care business for next 2-3 years, sir?
Ziggler business will entail anywhere between 100 to 150 crores. As far as chemical business is concerned, we still can close to double the revenue from the existing capex. So there may not be any major capex involved until we achieve 80% utilization.
Okay, so the only pet care division will have a capex of 100 crores around.
Yeah, 100 to 150 crores. Not necessarily capex, it includes operational losses as well.
So put all 3 divisions together, what should be our peak debt? Because right now our cash flows are impacted due to the market.
Yeah, we are still sitting at a very healthy position of 1:1 debt EBITDA position, and that do not seem to be a concern for us now.
Okay. And sir, your capex for BOPET line is 100 crores or 450 crores? Because in 2 different slides, 2 different figures are given. So please clarify.
4 crores and the balance capex is already done. So all put together it is 450 crores.
For BOPET line?
Yeah. BOPET line including all the value-added assets that we put along with it.
Okay. Okay, sir. Thank you very much and all the best.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Jiten Parmar from Aurum Capital. Please go ahead.
Good afternoon. Congratulations on the decent set of numbers in a very tough environment. My question is more on, can you throw some light on what were the volumes? Because prices have been fluctuating, so we'll be getting a better sense if we can get to know the volumes on all the 3 sides, basically semi-specialty, specialty, and commodity.
The Neeraj has already stated they are all in the ratio of around 1/3, 1/3, 1/3.
Yeah. So, but I'm saying any volume last year and what year is this year? Is there any change or what? If you can get the volume growth, that would be great. Hello.
Yes.
Yeah. From last year, the volume growth is 7%.
Okay. Okay. That's all. Okay. Thank you.
Thank you. The next question is from the line of Anuj Salian from, Anuj Salian is an individual investor. Please go ahead.
Yes, hi. Thank you for the chance. I have a few questions. First, could you tell me what kind of revenue and margins we expect from the master batches segment? And who are the competitors in this segment? As like there are a lot of small players in this and there are big players competing. So could you tell me about the margins and revenue?
Yeah, we are largely in a film-related master batch as of now. There are two multinational competitors and three local competitors, but largely the market is dominated by multinational competitors. And out of our total revenue in CSC, close to 70% revenue is coming from master batch.
Okay. Okay. Are we expecting any more industry-wise capacity additions for the next couple of years?
In which business are you saying?
I think it is margin in the packaging business.
Yeah. So see, as far as polyester is concerned, there will be some lines which are coming up in 23 and 24. And then after that, there are no further announcements. In BOPP, there are not many lines up till 24. I think only 2 lines more are coming. But in 25, there are, I think, at least 6 lines. But what we continue to hear is that a lot of players are sensibly delaying their projects to 26 and 27.
Okay, understood. And one last question on the heat control film. Will this be a B2C product and will it be an in-house brand? Could you throw some light on this?
Yeah, we have already kept the brand name of Cosmo Sunshield, and it will be a consumer product for the Indian market. In the exports, we'll treat it as a B2B product.
Okay, understood. Okay, yes, thank you. That was helpful. And all the best.
Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may press star and 1. The next question is from the line of Varun Gupta from Augmenta Research. Please go ahead.
Hi. Thank you, sir, for the opportunity. First, I have 2 small questions. The first question would be on the BOPET line right now. We'll be only producing commodity films, right?
Yeah, our line is actually a shrink, label and some specialty product lines. It has a feature to run commodity products. Today, you are right, we are largely producing commodity products, but as we have said earlier, that within 3 years, we intend to take roughly 60% of our sales from this line to specialty products.
Okay, understood. And could you tell me the margins on the commodity BOPET line that we saw in Q4?
They were in negative. At EBITDA level, it had made losses.
Okay. And one last question on the specialty side. You mentioned that there was some inventory correction in H2 that happened. So are we done with the inventory correction, or can we expect some more inventory correction to happen in Q1?
Majority of the corrections happened in quarter 3 and remaining corrections happened in quarter 4. So next quarter, we do not foresee any inventory corrections.
Okay, understood, sir. Thank you.
Thank you. Participants, you may press star 1 to ask a question. The next question is from the line of Navneet Bhaiya, an individual investor. Please go ahead.
Hi, Neeraj, and hi, Pankaj. So my question was again on the BOPET. Are you operating at full utilization of the BOPET line? Because I believe in Q3 you were holding back your utilization because of the poor market conditions.
Sorry, come back again.
In your BOPET line, are you operating at full utilization now? Because I believe in Q3 you were going a little slow on the utilization given the poor market conditions. So are you operating 100% now on the BOPET line?
Even in quarter 4, we were not operating at full capacity. We were largely at 60-65% because we are right now making a lot of new products. So we are taking them from lab level to commercial level. So, no, not really. We utilize only 65%, and even in quarter 1, we don't expect to utilize fully.
Okay, so you'll utilize it fully only once you get your...
But the line for you is a little muffled.
Is it better now?
Yes, this is much better, sir. Please go ahead.
Yeah, sorry. So, so you intend to utilize it fully only once, your specialty BOPET films are ready, so which may take a couple of years. Is that correct?
Unless commodity margins really get much better,
understood.
In which case we'll evaluate, running higher capacity. But our focus has been more of specialty products. So, as you rightly pointed out, we may not use full capacity for some time.
Understood. Can you also tell me about your master batches, adhesives, and your chemicals utilization? Are you operating those businesses at full utilization right now, or are they suboptimal or lower than 100%?
These are new businesses. We are just at 50% right now.
All three of them, roughly at 50%. Hello?
Yeah, you are right, 50%.
So do you expect these to get to 100% this year, next year? When are we seeing the upside in these businesses in terms of utilization?
I think earliest will be 24-25.
Understood. And my last question on Ziggy. So you mentioned you had a 7 crore EBITDA loss this year, and break-even is expected 3 years hence. So what is our peak loss expected from this business? Is it annualized 7 crores, or it can go higher from here?
It will still go higher from here, and only once we have, a larger pie, then it will start coming down. So next year it will continue to go higher. What we feel is that it can touch 10-12 crores per quarter, and then after that it will start coming down.
Right. So FY24 could be the peak loss year, and then maybe FY25 it might get better.
That is what we project as well.
Okay, fair enough. Thank you so much, and all the best.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Vipul Shah from Sumangal Investment. Please go ahead.
Sir, just a little clarification. You said your BOPET line capex is 100 crores, but in presentation you mentioned it as 590 crores. So, can you clarify what I'm missing here, sir?
So, the 590 number includes the remaining capex on the BOPP line, CPP line, and value-add assets on the BOPET line. So, all taken together is 590 crore rupees. You will also notice in investors' presentation there is a comment mentioned along with it that close to 100 crore rupee out of this we have already spent in March 23 balance sheet.
Okay, so upon completion of this 590 crore capex, that line will be 100% specialty line?
So I will repeat it for you. You see, we had done close to 800 crore rupee of capex on BOPP line, BOPET line, and CPP line. Out of these, BOPP line and CPP line, major capex is yet to be done, which is largely representing in 590 crore figure. On BOPET side, larger part of the capex has already been done in March 23 balance sheet. Only some part of value-add asset capex is pending, which is being done in the current quarter.
So can you quantify what will be that value-add capex for BOPET line, remaining capex?
It should be close. Remaining capex it should be closer to 50 crore rupees.
That pertains just for BOPP line, right? BOPET line, sorry.
Yeah. Value-add asset on the BOPET line.
Okay, sir. Thank you very much. Yeah.
Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may press star and 1. Participants, to ask a question, you may press star and 1. As there are no further questions, I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Well, thank you. We hope that we could address your questions appropriately. If I have to sum up, the company's strong specialty film portfolio should continue to deliver superior returns, although in the near-term outlook for the BOPP and BOPET front may be a little challenging. We are working parallelly on several cost rationalization and R&D projects which should add value in coming quarters and years. Zigbee is rapidly becoming well known among the pet parents, benefiting all pet lovers and company stakeholders. Cosmo specialty chemical side, the subsidiary should double its revenue in coming years with the launch of the new products. Now at the end, I would like to mention the statutory declaration once again. Certain statements in this Concall may be forward-looking statements. These statements are based on management's current expectation and are subject to uncertainty and changes in circumstances. These statements are not guarantees of future results. Thank you very much for joining.
Thank you. On behalf of Cosmo First Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.